joined this morning with Laurence, who is our Chief Underwriting Officer and Deputy Chief Executive for London. Let me start, Laurence, thank you for joining us. Let me start this morning. Earlier this year, Ken described 1/1 market conditions as squishy. More recently, Louise has talked about it being transitional.
Yeah.
How would you describe, just based on what we've seen at 7/1, how would you describe market conditions?
Yeah, I wouldn't disagree at all, to be honest. I think we're in that period where there's a lot of capacity, there's a lot of money that needs a home. Memories are short on the back of a couple of, good underwriting years. And I think we are in a transitional part of the market. But frankly, that's where the underwriters earn their keep, is, knowing when the music's going to stop. And I think we're in that kind of period now where the music hasn't stopped, but it's definitely getting more difficult to hear.
And we can talk about the new capacity that's coming in that doesn't have that kind of memory of the losses or the reserving issues that
I don't think it's mostly new capacity. I think it's existing capacity. I think one of the things that we saw from the hard market was it was really driven by discipline, and it was the kind of restriction of deployment.
Right.
So I think really what's happening now is there is some new capacity, and it obviously depends on which line of business and region. But really what we're seeing at the moment is we would probably define as less discipline under the existing capacity that's already out there. And again, I think it's a bit like a recession. The more you talk about a soft market, the more you exacerbate its appearance. And I think as soon as you start talking about market cycles and transitioning, conversations are had around positioning on programs, getting behind core cedents, relevance becomes key about maximizing your participation. And all that then does is kind of exacerbate the market decline that we're kind of talking about.
Creates the additional kind of volatility between the peaks and the troughs.
Yeah, absolutely. Yeah. And then the speed of it appearing.
And how do you see us, TransRe? We have a strong balance sheet. Mm-hmm. We have the financial rating required. How do you see us differentiating in that kind of transitional market?
Yeah, it's very, very difficult. And I think really it's about our articulating our value proposition. And I think we sometimes forget, or we don't focus enough on the fact we work in sales. And part of that is understanding what exactly we're bringing to the table. We talk about it all the time. We know when we talk to underwriters and the teams what it is, but I think being able to effectively articulate that to brokers and to markets, I think is really key. Obviously the balance sheet we talk about, but in London, we've got a huge amount of specialty business. And I think the losses that have happened over the last few years, we can't really call them black swans because they happen every year. But in terms of the type of losses that have happened in the last few years, from Baltimore to Ukraine to COVID, I think has really demonstrated the sort of product line expertise and knowledge is absolutely key. And the more time we spend with clients, the more it's clear that they want people they can pick up the phone to, have a conversation, who understand the business, and they take a long-term kind of relationship view of the deals. And that's kind of how we've always approached the business. And we push that, I think, in London, especially on the specialty. We lead a huge amount of the business. We like to think we're adding value, through the quoting process, through the, for the designing the programs and looking at coverage and stuff. And I think we spend a huge amount of time on sort of trying to add value in the chain for that point. We don't think we get enough differentiation for the balance sheet and the ability to, or the knowledge and the confidence we think markets should have that we will be there tomorrow, regardless of the loss, being able to trade forward with the same, if not more, capacity.
When you talk about differentiation there, are you talking about in terms of the terms, conditions and price, or are you talking about the line size?
It's a combination of everything. I'm certainly not saying we differentiate by being cheap. I don't think there's any indication at all. No. I don't think anyone would say that we are cheap. But I think differentiation, again, it goes back to the question of relevance, and are you relevant? And I think line size has been a key focus for us over the last couple of years under sort of new ownership, to really sort of consolidate on programs and teams with cedents that we back long term. Mm. We sort of want to, we've often talked about sort of having lead line mentality and sometimes follow line capacity. And I think really we're just trying to bridge that gap a little bit to make sure that we're really pushing our line size.
So lead line capability means not just the ability to quote, but actually to discuss and negotiate the appropriate structure.
Exactly. It's the understanding of the business. I mean,
Yeah.
we've got such a depth of experience throughout the company across all lines of business, and we really need to tap into that across, all the programs that we see. It does come down to things. Coverage. I mean, Ukraine was a key example where we're looking at kind of how do we gear coverage on marine placements around sort of blocking and trapping cover, and just cover in the region. And aviation is another example where we've had, a lot of challenges. So yeah, I think we really tried hard to leverage that expertise, followed with line size.
Right. London has always been, from Lloyd's 300-year history and so forth, it's always been a specialist market.
Mm-hmm.
And it's always been the kind of market of last resort where deals come in to find homes. The question really is, do you think that level of specialism and expertise is still as applicable in a modern environment where buyers are buying on a whole account basis? They're buying, there may be individual towers involved, but they're buying a core program.
Yeah.
Does that require the same level of expertise that London has traditionally had?
I mean, it's a good question. I mean, if you look at TransRe, I mean, the way we're set up is designed to be as difficult as possible to look holistically. We're geographical and we're line of business. So, we to some degree we have silos. So the key really is then joining those silos up. We still, it's in our DNA that we want to be close to source and have, close, long-standing relationships in all our sort of respective markets. And I think London's no different. I think we're reliant on the people we've got to talk to each other and communicate, across the group. And I think we do that quite effectively. But the reality is the market has changed. And I think our approach to some of our clients and lines will probably need to adapt as well. And it's probably no different than you'd have your own investment portfolio where you would treat some more opportunistically and some maybe more as a tracker. And I think there's a balance to have, the two within any portfolio. I mean, we obsess in London, especially on, we've got some people who've been there a long time writing specialty business who, like to think of themselves as, sort of cherry picking every individual deal. I think realistically that can't happen as much anymore. And I think the key, especially in the sort of market we're in now, the key is risk selection and client selection, and backing those teams where you get the data, you get the access, you get the visibility, you trust, and you understand how they're run, and that they will ride out the cycle with you, and you've got.
And it's like you said, you go back to the being relevant to them, because just as you're looking at it as an index and stock picking, so are they.
Yeah,
the clients are looking at it. We need a core program, and then we need individual towers given our particular specialisms. So, anything else you want to talk about as we approach conference season? What are the key messages you'll be sending to the team?
Yeah, I mean, it's going to be pretty much what we've already discussed, to be honest. I think making sure we're really understanding and then articulating our value proposition and what exactly we're bringing to the table is going to be key. And for the teams, I would just say it's risk selection. The focus is on risk selection and client selection and maintaining that relevance. I think there's always a danger, through any market cycle of over-engineering portfolios. And I think that there's, reducing lines and gearing your line to, a bit less than last year if it's not as good. And I think there's also a danger of us and the market both over and underreacting to market cycles. So timing is going to be absolutely key. But we're coming off several years of great profitability. The adequacy is still there.
Yep.
So I certainly don't want to come across as kind of doom and gloom, but the direction of travel at the moment is pretty clear. So for the teams, I think for the market, I would just say that we have been and always will be a long-standing, relationship, pragmatic, professional reinsurer with the balance sheet we've got behind us, and we are there for the long term. So the heart of that message is, not all capacity is created equal. And you would hope that there is some differentiation to be had from having expertise on every single line of business locally, getting to know clients, pushing long-term relationships. You'd hope that has.
We have opinions based on experience.
Yes.
Laurence, thank you very much.
Thank you.